Listen to me. If you are standing on the precipice of retirement, or if you have already crossed that finish line, I want you to look at me right now. We need to talk about your cash flow, because the way you handle your money right now determines the quality of your life tomorrow. Lately, I have been getting so many questions from people just like you asking about a smartphone app called EarnIn. They see the advertisements online. They hear people talking about getting paid every single day instead of waiting weeks for a check. And the big question landing on my desk is, Susie, what is EarnIn? How does it work for a beginner, and should I be using it? I understand the fear that is driving this question. I know exactly what keeps you up at 2 o'clock in the morning. You are terrified of running out of money. You are looking at rising prices, unpredictable utility bills, or a sudden medical copay, and you are terrified that your fixed monthly income isn't going to stretch far enough to cover a temporary gap. You fear the humiliation of a bounce check or a $40 bank overdraft fee. So when an app comes along promising to hand you your hard-earned money today instead of next week, it sounds like an absolute godsend. But before you download a single thing, you must understand exactly what this platform is and, more importantly, what it is not. EarnIn is what the financial world calls an earned wage access app. It is not a bank. It is a technology platform designed for people who work a traditional job and have a steady paycheck. The way it works is simple on the surface. You connect your checking account and you verify where you work, sometimes even letting the app track your location to prove you are actually at your job. As you clock in and work your hours, the app calculates how much money you have technically earned but haven't been paid yet. If you find yourself in a tight spot, you can open the app and request a cash out of up to $150 a day, up to a maximum of $1,000 per pay period. Then, when your actual payday arrives, EarnIn automatically reaches into your checking account and takes that money back. The app proudly advertises that there is no traditional interest rate, no mandatory fees, and no credit check. Sounds beautiful, right? It sounds a whole lot better than a predatory payday loan that charges 400% interest, or a credit card that traps you in debt. And yes, if we are strictly comparing it to a payday loan, EarnIn is a far safer alternative. But I need you to hear me loud and clear. No interest does not mean free. EarnIn operates on what they call an optional tipping model. When you cash out your money early, they ask you to leave a tip to support the community. They also offer a feature called lightning speed. If you want your money deposited into your account within minutes instead of waiting 1 to 3 business days, you have to pay a fee that starts at $3.99 and can go up to $5.99 depending on how much you are taking out. Now, let's do some math, because numbers do not lie. If you advance yourself $100 for just 5 days before your paycheck arrives, and you pay a $4 lightning speed fee plus a small $2 tip, you just paid $6 to borrow $100 for 5 days. Do you know what that calculates to if you annualize that cost? That is an annualized percentage rate of over 400%. You are paying a massive premium just for the speed of accessing your own money. But here is the absolute biggest problem for anyone targeting retirement. EarnIn requires a steady paycheck from employment. If your income is coming entirely from Social Security, a pension, or regular distributions from your 401k or traditional IRA, you do not qualify to use the cash-out features of this app. It is built for active workers. If you are working a part-time job in retirement to stay busy and supplement your income, yes, you might be eligible. But if you are fully retired, this tool is off the table for your daily cash needs. Even if you are currently working and getting ready to retire in the next year or two, using an app like this can set a dangerous psychological trap. When you pull money forward from your next paycheck to cover a bill today, what happens when that next paycheck actually arrives? It arrives short. The app automatically deducts what you took. Now, you have less money to cover the next month's bills, which forces you to use the app all over again. You trap yourself in a vicious cycle of robbing Peter to pay Paul, living paycheck to paycheck, except now you are paying fees just to shift the days your money arrives. You cannot enter retirement living that way. Retirement requires financial peace of mind. It requires stability. It requires knowing exactly what is coming in and what is going out. So, what is your actionable takeaway? If you are a beginner looking at EarnIn because your budget is so tight that you cannot make it to the end of the month, the answer is not to find faster ways to spend your money. The answer is to fix the underlying cash flow mismatch. First, if you are experiencing temporary gaps, call your utility companies, your medical providers, and your insurance companies. Ask them to change your billing due dates so they align perfectly with the days your income actually hits your account. Most companies will do this for free if you just ask. Second, look into your current bank account features. Many modern, high-quality banks now offer early direct deposit for free, allowing you to get your regular paycheck or your government check up to 2 days early without paying a single dime in fees or tips. And third, you must build an emergency savings fund, even if it is just $500 to start. That is your true financial shield. When an unexpected bill comes up, you do not want to rely on an app, an algorithm, or a tech company to approve a cash advance. You want to rely on yourself. EarnIn is a clever tool for a specific type of worker who needs an occasional lifeline, but it is a band-aid, not a cure. True financial freedom in your retirement years means you control your money. Your money does not control you. Stay safe, be smart, and protect your hard-earned cash.